All right, hello, and welcome to Camel Finance. I'm your boy Camel, and today I mostly just want to go over what I'm looking out for ahead of this week, what I'm expecting to see and do this week. I am expecting to add some positions. I'm expecting Bitcoin to find a cycle low. Sentiment out there has gotten really bearish. Some of the stock charts are starting to look a little bit concerning, so we'll talk about that. Ultimately, I think the take home of the week just gone is we had PCE data coming in hotter than expected. So the headline was 5.4, it was above the 5%, and the core was 4.7, above the 4.3% expected. PCE, of course, is the preferred inflation measure by the Fed. The narrative is that the markets are now repricing for this hot inflation data. Perhaps inflation's more sticky than we initially thought, or at least the market initially thought. And now the market is starting to price in a 50 basis point hike at the next FOMC due on the 22nd of March. So this has increased significantly since the hot PCE print. And the market is now likely repricing as it tries to figure out if this 50 basis point hike becomes more likely than the 25. The market is just doing its job. The market is forward looking and it's trying to figure out exactly where the price needs to be in order to accommodate this newly obtained information. That's the narrative, at least, right? However, I would argue that essentially is another case of show me the charts and I'll tell you the news, right? Have we or have we not been expecting the cycle lows to show up at the end of the month? I've been saying the 28th would be a perfect 60-day cycle low for Bitcoin, and we're now on the 26th. So it's sort of right on schedule that we get some sort of narrative, some sort of news, some sort of hot data, isn't it? It's right on time given where the cycle lows are. So we'll get to the charts in just a minute. There's a plenty, absolutely loads, as you can see, of earnings coming out over the following week. So there's plenty of data for the market to digest. There's plenty of opportunity for stocks to set up and break out to the upside. But there's also plenty of opportunity for earnings to miss and these stocks to break down. Remember, one of the key things we're looking for out of this pullback is we're looking for sentiment to become increasingly bearish, which I think we're almost there. I think we're getting to the point where a lot of people are convinced now that that breakout is going to fail, even though it's too early to say so. It could do, but I still think it's too early to say that for sure. And we're also looking for individual stocks to set up and break higher and maintain that strong breadth in the indexes if we're going to see an upside rally unfold. Furthermore, we've got Yellen saying that she sees a possible soft landing. So isn't that exactly one of the things we were looking for in the narrative in the media? We were looking for this narrative of a possible soft landing. It always seems like there's a soft landing to be had, but of course, we know there's almost no chance of a soft landing and it's just going to appear that way for a while. The other thing we wanted to see in the narratives, in terms of the media narratives, was we wanted to see people like Yellen coming out and saying there's a good chance the economy will avoid a recession as inflation is coming down. So it'll be really interesting to see if these two narratives pick up. It'll be interesting to see if stocks can emerge from bases and if they can maintain a breadth in the index above 60. So again, I'll show you that in just a minute. Another positive and encouraging sign for bulls here is Cramer has come out and said it might be smart to do some selling and raise some cash. So this is the sort of thing I would want to see coupled with the prior narratives that I've just shown you. And remember, many people are still underestimating the significant amount of liquidity in today's markets. Currently, there's $2.2 trillion in excess liquidity held overnight at the Fed, which has been accumulated as part of the Fed's efforts to tighten the market. However, once this liquidity is eventually released back into the market, it could have a massive impact, potentially creating a tidal wave of activity and volatility. As investors and traders, it's crucial to keep an eye on this situation and be prepared for any potential outcomes. The liquidity has been removed from the market, but it's sat on the sidelines ready to be deployed. Also fits with the theme I've been showing in this channel in the past few videos of China starting to inject massive amounts of liquidity, as well as Japan, right? And so with the narrative souring most investors' viewpoint, with many bears coming out and starting to gloat at this point, we're starting to see fractals like this show up. So is it possible that we just got rejected as per the right side and we're about to roll over and go lower? Is that possible? Or is this just the sort of thing that we want to see in order to fuel more upside momentum? Here's another take. Koosh here has drawn this trend line slightly different to how I had it on the S&P, but as far as he can tell, we have just bounced off of support. Also note that this is right in the timing band for a cycle low on the S&P 500. Bitcoin, however, looks an awful lot better, an awful lot more encouraging to me at least. If you look at all four of these prior times, we break out, we form an expanding broadening wedge, a rising broadening wedge, and then we resolve to the upside out of that. Here it is again, breakout, expanding broadening wedge, and then we resolve to the upside. Right now, we're in the middle of completing this expand and broadening wedge. I believe, and I'll show you this in the charts in just a moment, we're about to drop down into this cycle low. We're about to come rapidly out of this cycle low, and then we're going to continue to do Bitcoin things just like we did the prior 3 times. Yellen has been a lot kinder to Bitcoin in recent days. She has just been saying that the United States has no intention of banning Bitcoin and crypto. So no surprises there. Good luck banning it, as we often say on this channel. We continue to see banks adopt Bitcoin and crypto. 136 insured banks had Bitcoin and crypto related plans or activities such as trading, custody of assets, and lending of cryptocurrency to exchanges. So again, we continue to see these banks rush and scramble to adopt Bitcoin. And a Swiss crypto privacy company has just opened an office in France without opening a bank account, relying solely on Bitcoin. Again, another trend that I believe we're likely to see. So with all that said, let's get into some charts. The dollar coming into its first major area of resistance. We expected this to be the first pivot point, the first hang-up point for the dollar, the first major resistance zone. So are we going to see this rejected and roll over? That would certainly line up with the Bitcoin cycle. Failure to do so means we'll break out, and then we'll be looking at the top of this range here, this top of this yellow downward sloping resistance line. That's where I believe the maximum height for the dollar is, assuming we don't get rejected at this red level. So it'll be really interesting to see what happens over the coming days. In terms of the crypto markets, everything is going perfectly according to plan. Especially if you've been watching this channel for a while, then you'll know full well we've been ready for this cycle low since the prior cycle low, right? By the time we got up into this neighborhood, we were sort of expecting to see a cycle low show up, and now here it is. So all we need to see, we've done most of the work here. All we need to see is a nice, big, strong green candle to the upside, and then we can buy on that green candle, on that large green candle. So you see this price action here. This is very typical. We pull down, and then there's a big, strong upward thrust out of this dip right here. So that's exactly what we're looking to repeat, except I expect it to follow through significantly more as it does this. And of course, as I've been saying over and over again, when we get a clear sign of that, we can add to positions, we can move the stop up from here to here at least, if not wherever this swing forms, and then we can look to ride the next cycle. The thing we'll be looking for once we're in is that we do not come back down and take out the low wherever the low ends up forming. That would be the warning sign to get out of all trades and reduce all crypto exposure. Because if that were to happen, particularly if that were to happen within the first week or two of the rally, then we can say we've got a failed cycle and this whole thing is incredibly bearish, or at least significantly more bearish than I am currently anticipating it to be. That's, however, not my primary expectation. My primary expectation is any day now, we are going to get a big, strong green candle. I am going to move my stop up, add to positions, and then we're going to look to see something like this unfold, targeting at least 30K. So overall, Bitcoin looking constructive. I'm ready. I just need to see a bit of confirmation, just need to see a nice big green candle, and then Camel will be happy to get long. The same is true of Ethereum. Okay, so Ethereum, wherever this big green candle comes in for Bitcoin, that will be my trigger to do the exact same thing for Ethereum. I'll move the stop up to wherever the swing forms, I'll add a position, and we'll let the profit from the first trade finance the risk on the second trade and see what we can do over the next month or two. Hopping into this Bitcoin chart, there's not really much to say about this apart from I think we've broken away from this fractal. Now, it's worth noting that since we're expecting a cycle low to show up any day now, there's a good chance we could sort of catch this back up, but I think that would be just a little bit too extreme. So of course that remains to be seen. That would put us at like 30K within about a week's time. So it's not impossible for Bitcoin. It's actually quite light work for Bitcoin, but am I expecting that? No, I would think we're probably going to stay much more at this sort of angle. Mind you, I mean, we could certainly be there. Anything is possible, but of course we were never trading off of this fractal. This fractal was more for fun, but for now we do seem to be deviating away from it more than overlaying it. So I'll keep an eye on this, but I'm not really expecting too much out of that fractal, to be honest. However, the Wyckoff accumulation, as you can see here, looks really good, looks set just to find this low and explode higher, entering phase E. And then, like I said, we're targeting 30 plus K for Bitcoin. So that's great news. In terms of the crypto equities like Coinbase, it's the same copy and paste template, isn't it? So we're looking for that cycle low, looking to add exposure, move the stop up, let the profit from the first trade finance the risk for the second trade. And that's true of Coinbase, MicroStrategy, Riot, and Marathon. So again, just to be clear, I know it's quite repetitive, but I just want to be really clear exactly how I plan to handle this week. I expect this swing low to show up any day now. Like I said, all I'm looking for is a big green candle, and then I will take that as confirmation of a new cycle. I will add to all of these positions. I will move the stops up, and we are ready to do exactly what we did on the prior entries all over again for another 60-day cycle. As of Friday, I was stopped on my UKX position, so we no longer need this. We pushed this trade for as long as physically possible. Nothing more to say about that, apart from we did what we could. It didn't reach my target yet of 8,500, but remember, a lot of trading is just don't hurt yourself, okay? Don't self-harm. It would be easy for me in this situation to be disappointed. I am disappointed. I wanted this to do something like this and go all the way up to 8,500, and that could still happen. But don't be self-harming here and saying, well, I'll just keep pushing this trade. It'll probably work out. It'll probably work out. Respect the risk. Lock in the profit. If we end up making like a bull flag here that resolves higher, then what we could do is just buy the FTSE 100 on a break of that bull flag, and there's nothing wrong with that. But right now, there's nothing to say this isn't going to nosedive, and if it does that, then all of that profit and all of this time that we sat in the trade will have been absolutely for nothing. So if you're one of the people that took this trade, and I know many of you did, at least a couple of you followed me into this trade, which, by the way, you shouldn't do. You should never follow a guy on YouTube. Don't do that. That's bad trading strategy. Don't just copy people on the internet, especially people that don't give financial advice and just make content for entertainment. But hypothetically, if you were one of these that copied a camel on the internet in this trade, then make sure you respect the risk. The VIX is giving me subtle hints, subtle tells that perhaps we're about to see a bounce in the stock market. And that would make sense given where the cycle counts are. We'll get to the equity markets in just a minute, the US equities. But this is not spiking, is it? This is not like one of these regular VIX spikes. It's not like one of these sort of breakouts that just explodes higher. It hasn't done that. Now, that doesn't mean it couldn't. It certainly could next week. It could certainly morph into a look that looks something like this. And that's fine because that's what the hedge is for, right? We're insured in case this is going to happen. But right now, I said when we got this big red push on, what day would that have been? On Wednesday, I said there's a good chance that will end up being the swing high and that will end up being the top in the VIX, and therefore we could get a bounce out of equities. And so far, it kind of looks like that. Now, again, it can change and it can change fast, but objectively speaking, it hasn't changed yet. So if this can continue to compress, then of course that will be coming off the back of the stocks getting a bounce. So it'll be interesting to see how this works out. For now, I continue to remain hedged. I continue to look for longs, but if this is going to spike, then obviously the stock market is going to crash. So we'll see how that goes. Here's the Russell 2K, hanging on to this zone, isn't it? Absolutely hanging in there by a thread. So can it continue to chop around here? Can it break out? In which case, like I said before many times, this will be a long from me wherever this breaks out. So I'm lining this up, not currently long, but looking to get long if we can break out from this downward sloping blue trend line. That could well happen this week. And if it does, expect me to tell you I'm going long. So again, another trade called out well ahead of time. I will make sure I notify you on the day that I take this long, if I take it. So make sure you subscribe and turn the notifications on if you want to see that. Dow Jones clearly breaking down, isn't it? So not really a level here anymore. Perhaps we're going to end up forming some sort of double bottom here. I've said all along that as long as we're above these highs, then we won't be stopped out from our first entry, and therefore the trade is valid. But if we come down and get stopped out, then obviously this is significant weakness, significant damage in the Dow. So it'll be important to keep our eye on this. Can this, however, end up forming like a double bottom and then bounce up towards the top of this range? Quite possibly. That, of course, remains to be seen. The Dow Jones not looking super healthy at the moment. The Nasdaq is somewhat below this level, isn't it? So this speaks to respecting the risk. This speaks to getting out of the trade. This speaks to, we've pushed it as far as we could. And now there's nothing to say this isn't going to morph into a super, super bearish look. It's really good to sit on the sidelines sometimes and reassess the situation. That's what we've done here. Now, I'm looking to get long. Again, I somewhat expect a bounce to come this week, and especially if it's going to break out from this downward sloping purple resistance line, then expect me to tell you I'm going long the Nasdaq, and that would be okay because we will have technical repair. But if it maintains bleeding down underneath this line and starts to get more and more bearish, then at least we didn't give back all of the profit from our initial entry, which was here. At least we didn't give back all of this move, right? And then end up getting stopped out for a loss. So again, it's just about managing the risk, making sure you lock in some profits and stay on the right side of the market with no bias. S&P 500 looks to me like it wants to form a cycle low any day now. It's certainly in the timing band. The VIX, as I said, is starting to come off a little bit. So can we see this catch a bounce off of this retest line in blue here? The way I've drawn this red line, we are just about below it at the moment. The way Kush has drawn it from back here, as I showed you earlier, I'll adjust that line to that now, as you can see, and we're just about in. So is it in? Isn't it in? That depends on how you draw the line, whether you use the close or the wicks. I actually prefer the wicks, which means we are just below it. But given that we're about to find a cycle low, I will give it a day or two more just to see how we close on Monday and Tuesday and see if we can't get a little turnaround from this. We have our stop loss in place, we have our line in the sand, and we have our position hedged on the VIX. So there's nothing wrong with this. I am kind of expecting to see further upside from here, but we lose these lows, and particularly if we come down below this blue line and end up getting stopped on this position, then, again, We pushed the trade for as long as we could push it. Once you start to get technical breakdowns, there's nothing more you can do apart from get neutral and assess the situation. I think it's pretty safe to say by now we can reject this blue count. I don't actually want anything to do with this blue count. I don't think this blue count is valid anymore. So I'm going to get rid of all of these and expect a cycle low to form any day now for the US equities. So we'll see if we can get that swing low pattern. We'll be looking for the exact same thing I talked about in Bitcoin. We'll be looking for a nice, big, strong green candle. Can we get it? Can't we get it? That, of course, remains to be seen. If we don't, then we'll go back to a different count. But for now, this seems pretty right to me. So we'll see what the market can give over the coming week. The last couple of things I want to talk about is natural gas working its way up to this red line, isn't it? So again, as I keep saying, we get above this, and this can be a long from me targeting a breakout of the pitchfork. We'll see if that can happen. If it gets rejected here, then I don't want to be anywhere near this from longs. And I'm not really interested in shorting this since we're all the way down at like 250 for gas, right? I mean, is gas going to go to zero? Probably not. Is there much? There's much more upside here, isn't there, than downside. So for me, I'm not really interested in shorts personally. I would rather see if we can get a breakout and then take a nice big long swing trade. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, and turn the notifications on if you want to continue to get updates on how I deal with all of these markets in real time as a pro swing trader. I hope it's clear my intentions for the week. As I said multiple times, looking to add a bunch of exposure for crypto, certainly. Equities are a little bit more to be determined, but I think it's likely that we're going to see some bounces this week. We've managed to tick off pretty much everything else in terms of the narrative shift, in terms of bearish sentiment souring. So the big question is, can these earnings produce setups from stocks? Can stocks continue to emerge individually, and can that carry the market indexes higher? Hopping into the NASDAQ, I forgot to go through the breadth, but you can see here, this is the NASDAQ stocks above their 200-day moving average. So all the while we're holding this 50 to 60 range as support and trading above it, we can expect the market to move higher. We can expect the index to move higher. If I hop into the S&P 500, you can see in the S&P 500, it's the same sort of deal, right? We're currently at around 57% breadth in the market, so we're still using this 50 to 60 zone as support. That's the sort of thing you'd want to see for continuation higher. Of course, if this was to morph into a look where we flip this area into resistance and start to move down, then you would expect the indexes to roll over and this move to not continue to the upside. So we're looking for the breadth to continue to hold the 50 to 60% range like I just showed you. Can that happen? Nobody knows, but either way, we're positioned for all outcomes. So as ever, it's important to take it one day at a time and remain unbiased and flexible, open to all outcomes. I'm your boy Camel. I hope you enjoyed your weekend. Take care from me. All the best. Cheers. Bye.